Welcome to the Fintech portion today. I'm so excited to have you all here. I'm Scott Robinson, the co-founder of Plug and Play Fintech and VP for the company. So as many of you are aware, finance is changing. We're watching a number of significant trends that are occurring right now globally. So for example, central banks are now implementing negative interest rates. And so what this means for your business is revenue shifting. And we've seen this in the most recent quarterly report as it relates to investment banks. Numbers coming back as dismal as we saw right after 2008. And part of this story includes the tech impact. Technology is influencing, and digitization of your bank is going to play a large role in your ability to survive in the next 10 years. And so we're seeing folks like RBS and others that are now effectively outsourcing technology for the human element. And it's not just banks. One of our latest partners, Chicago Mercantile Exchange, CME Group, recently shut their futures floors, both in New York and as well as in Chicago. So the big question that I'm often asked is, where are you seeing the financial technology innovation? Where's it coming from? And of course, I'll be biased, it's here in Silicon Valley, but there's a couple big reasons why. So for example, in the past 3 years, we've seen about 40 financial institutions set up a lab or a ventures arm or their strategy team right here. And then there's the big element here is the capital flow. So this graphic kind of gives you a highlight of all the capital that's been deployed into financial technology startups. And the one thing I really want to point out here is here on the West Coast, roughly half of all capital flowing into the space is right in this 20 square mile radius. This is more than all of UK, Europe, Latin America, and Southeast Asia combined. So before you see the startups and hear from a very influential and respected entrepreneur who will give an update, I want to give you some context to where this program was born. So just in that room over there about 3 years ago, we started a little Bitcoin meetup. Who here has heard of Bitcoin? All right. Yeah, I'm sure most of the bankers will say, yeah, I like the underlying technology, but I don't know about this Bitcoin thing. I've heard that for 3 years. You'll hear a different story a little bit later. In this picture is Andreas Antonopoulos, one of the most premier folks in the domain. And from there, at one of these meetups, we had an entrepreneur named Michael Yang, who had founded MySimon, scaled it up for a few $100 million and exited. And he said, Said and I were at this meetup, hey guys, I went to this club in the 1970s in Palo Alto, and I met these two guys named Steve and Steve. And they had this weird prototype thing, I don't know, it was like personal computing or something. I'm seeing the same energy and excitement right here, right now in Bitcoin. And so at that moment, Syed turned to me and said, Scott, go make a Bitcoin accelerator. And so we did. And so you'll see a familiar face here. We announced the program December 2013. And on stage there, you can see we've got David Chen from Lightspeed and Chris Larson from Ripple and Jacob O from Perkins Coie, one of our mentors. And of course, Vinny, who at the time was working at Gift, a company that he had founded. And then to his left, David Johnson, a company that would later become a portfolio company, Factum. And so we took 6 startups into the program, no corporate touch, 4 of which raised a few $100K each. And it was right around the same time, summer 2014, we heard 2 large financial institutions were shopping to make a strategic investment into Bitcoin. And so we decided at that moment we should open this up. We'll maintain a Bitcoin and blockchain track, but we'll also look at mobile banking and wealth management and payment security. So we made the announcement that December, hot off the heels of the Lending Club IPO, and our goal was to bridge Wall Street and any other financial hub in this world to Silicon Valley and play on our strengths. And we launched this first batch in February 2015. We had 29 startups that were accepted from 864. The second batch would commence in July 2015, run through October. And we had some great events. Here's a great example. We held about, 12 startups pitched at Deutsche Bank's headquarters in New York at 60 Wall Street. And today represents the culmination of batch 3. And there's been a lot of people that have helped us. So for example, Ian Lee from Citi Ventures mentoring our startups just a few weeks ago. So when you ask yourselves, what are we doing and where's the innovation that we expect in financial technology, we have global reach. In addition to that, we have regional players that are very much versed in what's relevant for them. So we recognize that technology can't always be transferred across these different markets, and that's why we pair with folks that are experts in the domain. So this is what it looks like in the past 14 months. We've brought on 20 institutional partners, over 50 mentors in the network, partners like Plaid, or Morningstar are now helping our startups get access to data, which has traditionally been very expensive. And all the while, 72 startups have been accelerated, 2 have exited, one to Airbnb, one to Affirm, Max Levchin's new fintech company, 29 external funding events, and 36 plus pilots. So when you ask yourself, what do we do here at Plug and Play? Well, we're corporate innovation as a service. We have two objectives. First one is to optimize your current business. And we do that in such a way where we bring somebody that can make incremental change in your company. Cost cutting, really. On the second side, we augment new business, so tech transfer, matriculation into your industry, rapid prototyping, and an avenue for creative destruction, in case you want to hedge against some of these players. Said mentioned, lots going on in Germany. Well, your portfolio company, PayPal, is now valued at more than all the German banks combined. So this is a reality, and chances are this will impact your business in the next 10 years. So if you want to learn more, or you have any questions about the program, our team's all around, so please ask a question, shoot us a note. And before I introduce our keynote speaker, I just want to give some context for the history of our relationship. So at this same Bitcoin meetup in fall 2013, Vinny came and pitched his company at the time, Gift, which was a marketplace for gift cards. And he was a first mover in this space, one of the first few to accept Bitcoin to enable you to buy some of these gift cards. And so later he would talk on our panel right here, December 2013, with that group. But he's perhaps one of the most premier experts in the domain. And so to come full circle, it's pretty exciting for me to hear from Vinny, because if there's anything more important that's occurring right now in fintech, it's perhaps identity. Perhaps the most important element, the building block for everything else that comes from financial technology. So with that, an update on Bitcoin and blockchain, and please help me in welcoming Vinny Lingham, CEO of Gift, or Civic.
Couldn't guess that. Thanks, Scott. Hi, everyone. So I think Scott's really given me a very warm introduction. Thank you. Thanks for being here. I wanted to chat a bit about, obviously, Bitcoin. You couldn't be at a fintech conference in Silicon Valley without having a Bitcoin angle. But I want to just give I want to get a sense of the audience, and I'll tell you guys a bit of what I'm doing right now at my new company, Civic, and why Bitcoin, I think, is an interesting platform for innovation and technology. So very quickly, as Scott mentioned, I started Gift. We built that business up as a mobile app for gift cards. We identified use cases around using Bitcoin, actually, the blockchain, the Bitcoin blockchain, as a ledger of record for transferring gift card codes back and forth, between merchants and consumers. Because if you think about it, a gift card is just it's an amount it's like a ledger, right? So you give a merchant $100, and every time you use it, there's a deduction against it or credit to it, debit and credit. So you can actually use ledger technologies for that pretty effectively. So we built some cool tech around that at Gift. I wound up selling the company to First Data nearly 2 years ago, and finished up the end of last year, and went to look at what else, what I like to do with my next step in my career. And obviously, being very passionate about Bitcoin, I looked at things like identity. And for me, the identity problem still hasn't been solved, because you see online fraud, it's a massive problem. And the real issue is actually a term I've called PNP. Everyone's maybe familiar with CNP, card not present fraud. This is PNP, person not present. This is someone taking stolen information about you from either public records or from the dark web, and using that to open loans, credit cards, file fake tax returns, etc. So how do you solve the problem that the person who is in front of the computer or mobile device doing a transaction, how do you know that he is who he says he is? And so the goal for Civic was to create a method of doing that and identify uniquely each individual. So the crazy idea is we want to live in a world where if anyone uses your personal information on any website or application, you get notified on your phone, and you have the ability to stop that transaction or that new account from being opened. And that's what Civic's trying to do. And so the blockchain is a really interesting platform for innovation, because primarily it's an immutable record, an immutable database of records. Now, is anyone here from Africa? I am originally. Anyone else? Okay, cool. We have one other person, I think, or maybe a couple others in the crowd. So I have a South African passport. I'll get my US passport this year. But I was pretty disappointed about 6 or 7 years ago when my access to the UK was revoked, and Switzerland. So now when I go to the UK or Switzerland, I need a visa. And it was never the case for years and years. But the reason for this was, the South African government, through its meanderings, has allowed a lot of foreigners and illegal immigrants to come in and get fake South African passports. So it makes sense, right? So now the governments in Europe and the rest of the world are saying, well, we don't trust this document. We don't trust this passport that says that Vinny was born in South Africa, so he needs a visa, which we need to confirm. And it's a tedious process. And it's expensive. It takes 2 weeks. If I have a quick meeting in the UK, I would apply every single time. And that was quite an eye-opening for me, because the reason that they can create these fake passports is someone can go into the database at Home Affairs and just create a person. They can just add them to the record. He was born 25 years ago. And this is the problem. So when you look at blockchain, if a birth happened today that was recorded on the blockchain and verified by a third party, you cannot alter or modify that record even a day from now. The Bitcoin blockchain has got so much processing power going in that records cannot be changed after literally an hour or so. So for me, that was a very interesting insight, is that if you could use a public ledger of sorts and keep data private, but at least guarantee that information or events occurred at a certain point in time and it's immutable, you could build some interesting applications. So that's kind of the genesis and thinking of how we got to Civic. And I want to go into more what my thinking has been around Bitcoin over the past couple of years. As Scott said, I've been into it for a better part of 4 or 5 years now, and it's become an interesting place because, so I'll jump in the first slide. And so I hope you guys can see the graph. At the point where you see the blue line there, the Bitcoin price was sitting at $450 or $500. It had just spiked previously to $1,255, and it was kind of on its way down, but there was a lot of excitement in the industry that this thing is the next big thing. This is 2014. The spike was 2013, and then it came down 2014. But everyone at every conference I went to was convinced it was going to $2,000 by the end of 2014. And it was kind of like this blind faith. And if we took a step back, and Gift became the largest retailer of, largest online retailers accepting Bitcoins, we saw different patterns in consumer behavior emerging. And so I wrote a blog post about it, which and the conclusion was that Bitcoin is going to get to an equilibrium point. It needs to consolidate there for a while before it can eventually test any highs like 2000. And the reasons behind that were, where is the, did I go too far? No. Okay, so the reason is that Bitcoin is actually not a currency. A currency is something you can pay your taxes in. Right now, it's a means of exchange. You have to convert Bitcoin to dollars or any other currency, pay taxes, pay salaries, pay rent. It's a commodity. It's like gold. If we both agree on the price of gold, or there's a market price of gold, you can use gold as a medium of exchange. And so Bitcoin really is the world's first true digital commodity because it's limited. There's a limited supply, and so we need to look at it with a different lens. We saw at Gift, even though we had massive sales in the beginning, it was just the same number of people just keeping, they keep on buying, and then the sales tapered off, and the rest of our business took off in the mainstream consumer side. So credit cards took off, PayPal took off, etc. But Bitcoin kind of flatlined because consumers weren't adopting it because it's quite difficult to use for consumers. Smart contracts, it was like, well, there was talks about it, but no one really knew how to use the blockchain for a smart contract. So that was a bit more amorphous. And merchant adoption was outpacing consumers. So if you remember back in 2014, everyone was adding Bitcoin. Expedia was adding it, Overstock was adding it, Microsoft added it. Expedia just removed Bitcoin. Microsoft, I think, is removing Bitcoin. We had more merchants using it than consumers, and that was a big problem. So these are the reasons why I said it wasn't going to go up in price any further. And then the lack of trust with exchanges was limited. You had Mt. Gox going under. You had other breaches at exchanges. People couldn't really buy Bitcoins easily. So it was tough to, even the people who had Bitcoins, they couldn't sell them easily as well. So there was a problem there, and there was a loss of momentum, which eventually led to the thing stagnating for a while. And miners' margins were squeezed. So miners are the guys who run all these computers that mine Bitcoins and make sure that the transactions are secure. And when the price dropped to the 250 range, they were forced to sell more Bitcoins every month as a percentage of their holdings to keep up with paying electricity bills and hardware and salaries and investments. So that was basically what kept Bitcoin in this sort of mid-range price for a while. But this is the valley, okay, and this is technology. A lot changes in 2 years. That post was written 2 years ago in March, and I updated it with a new post in April. And I pulled some data from CoinDesk, actually, which showed that user growth is actually starting to outpace merchant adoption. So now more people worldwide are taking Bitcoin and using it, and especially in countries outside the US. The use case for Bitcoin in the US is actually limited somewhat because we have a pretty advanced financial infrastructure, credit cards, etc. But if you look at places like Africa, Asia, Bitcoin is a very interesting new platform for financial services. And so that's changed. Smart contracts have become a buzzword. All the banks are getting involved in smart contracts. They don't want to talk about Bitcoin per se. Bitcoin is the most secure blockchain, and some of these other blockchains we're seeing emerge, they've got some security flaws and holes. Some may be successful, some may not. But you can do smart contracts across multiple chains. And so I see a federation of chains emerging, but there's some companies doing interesting stuff in that space. Ethereum's taken off recently, but this is now coming to the fore as some really powerful and strong use cases for using Bitcoin and blockchain. And so the miner's margins now at $440, $450, a lot healthier. So less coins are being sold into the marketplace as well, which takes away selling pressure on the price. So right now, as you see in the past 6 months, Bitcoin has gone from bottoming out at the low 200s to about 450 right now, and the expectation is that it's going to go up. And I actually buy into that expectation right now for reasons that I'm giving you. We've also got the exchanges of, Bitstamp just been licensed in the EU. They got regulatory approval. Coinbase is a well-respected platform locally. They've raised, I think, $200 million in funding. Circle as well, BitX, Kraken. There are a lot of exchanges now that people trust and actually do proper KYC and AML on all their customers. They make sure that money laundering as much as possible. So, I mean, this is bank-level verification of customers. And so we're seeing that having this infrastructure in place is actually good for something like Bitcoin to be used if people want to buy and sell and trade. So, we think that, I personally think that what held the price below 1,000 is those conditions have changed, and I think the price will be over 1,000 again by the end of this year. That was my latest prediction. But what's creating the momentum is industrial use cases coming to the fore, and I'll tell you more about the coming short squeeze and something which I call real inflation versus nominal inflation. So industrial use cases. Bitcoin is really about trust. It's programmable trust. And so when you can use a platform like Bitcoin, all of a sudden, if you remember, look back to the 2008 financial crisis, there was just a lack of trust with banks and financial institutions. No one knew what each company, organization was holding, how good the assets were, whether they were worth anything, and there was a lack of transparency. And so every major bank that I know of is doing something in the blockchain space. May not be Bitcoin, but something in the blockchain space. And that is very, very encouraging. These are some of the use cases for blockchain. And Bitcoin as well is a big part of this. Some of these use cases Bitcoin can't cater for, but a lot of them Bitcoin can. And so we're seeing a ton of new companies. I mean, we're talking hundreds of companies and over $1 billion of VC in the past year or so going into the companies in this space. So there's an amazing amount of activity happening here. And these are really, really smart people with, good technical skills and commercial skills building good products and services, which may take a year or two to incubate and get to a point where it's market ready. But we're seeing a lot of activity here, which I think drives up the demand for blockchain type solutions. So I talk about the coming short squeeze. And so what's happening in the market right now for Bitcoin is that miners are basically forward selling their supply. And so if you're earning, 1,000 Bitcoins a month out of your mining operation, but you want to lock in the price, you may sell 10 months supply hoping that you can pay it back over the next 10 months, but you lock in the price and you avoid volatility. The problem is, as of 10th of July, the number of new Bitcoins being minted per day goes down by 50% based on the algorithm that's embedded in Bitcoin. And so all of a sudden, your supply gets choked. And that has a massive impact on the number of Bitcoins in circulation. Remember, there are only 21 million Bitcoins that will ever be minted. There's 15.5 million Bitcoins that are out there today, and they're coming out at a rate of 3,600 a day. That rate goes down to 1,800 a day as of about the 10th of July. And so what happens at that point, people who have forward sold more Bitcoins than they can produce need to buy them back in the market, which is going to create upward price pressure. And so this is the money supply of Bitcoin over time. So roughly every 4 years, the number of new coins coming out gets halved. So you'll see in the beginning, obviously, there was a ton of new Bitcoins being minted, but right now they're becoming more and more scarce, and the network's becoming more and more secure. So, I think there'll be a supply and demand correction in the market soon for that. And as I said, 21 million units will never be changed. The stats. And so from an inflation perspective, in 2014, you saw 10% inflation, normal inflation of Bitcoin, and the real inflation. And the difference between the difference in real and normal inflation is that with real inflation is based upon the number of coins that are actually not lost or abandoned or whatever. You probably hear these stories about people who have their hard drives formatted and the coins get lost. So we did a calculation. They said if you took out 25% of the Bitcoins ever mined, because the guys who mined in the early days didn't think it was worth anything, there's probably way less Bitcoins than we realize in actual circulation. So what does the inflation rate look like? And if you plot it down, we're going to 2016 where you're going to see between 6.4 and 8.7% inflation, and 2017 between 4 and 5.3. That's a very low inflation rate, and within 3 to 4 years, that gets halved again. So over time, you have this deflationary digital commodity that's out there, and if you want to discuss price, you got to believe that with inflation coming down like this, the price should go up, as long as the demand holds true for it. So the last thing is I want to leave 5 minutes for questions. I know I covered a lot, and I get that not everyone may be on the same page on Bitcoin. I may have said some things which is a little bit far-reaching, but I think that right now, what I'm seeing in the market is that governments around the world are taking Bitcoin seriously because financial institutions are taking it seriously. And today, I just read that the Japanese government, they've created a regulatory framework around Bitcoin. So if you look at geopolitics, the moment one government embraces something which is in short supply, and another government doesn't like that government, sees that, it becomes a bit of an arms race. So, look at oil, look at other commodities out there. The moment we get to a point where governments in the world want to start owning Bitcoin, you may see something of an arms race because no government wants the other one to own more of a certain commodity. And that could trigger another big price spike over time. I think that you will see this. I think my prediction would be that you will see some government activity in Bitcoin. And a lot of governments are looking to Bitcoin right now. I've had calls with a few. There's interest, but governments move slowly. But when that happens, there'll be a tipping point, and it becomes more of a competitive arms race. So, just in closing, I think that there's a lot happening in Bitcoin, and it's very hard to cover it in 20 minutes. I want to give you guys an update of where I think the market for it is going. Very much more positive than I was 2 years ago on it. But I'd like to just get some questions. I think Scott's got the mic.
Any questions from the audience? Yes, sir.
It's in the fintech industry, everybody's concern is the security. It looks like you are moving to security with the new venture Civic, if I understand it right. But did you encounter any new kind of crime since the launch of the Bitcoin? Is there something that you didn't expect? What did you expect, and how did you cope with it if you did?
I wouldn't say. I think what I didn't expect to see was the size of the identity theft market. I mean, you can buy social security numbers and personal informations at about $50 per social. So literally, I can go onto the dark web and type in your name, just some basic details. I could try and find your information on the dark web and pay for a file containing it for like $50, $100. Because, I mean, you guys probably saw LinkedIn got hacked recently. And all these healthcare companies, when they get hacked, those files, they typically sit on the files for 12 to 18 months. So what happens when a company gets hacked, the hackers take the information, they actually kind of like freeze it. They don't want to sell it right then, because what happens is the company responds, they give you 12 months free identity theft protection, credit monitoring. So if the information gets used, it's kind of worthless at that point. So they kind of hide the files, and then they only put it back on the market 12 to 18 months later when all the heat's died down, and then they start selling those files to criminals, and people want to use that to commit fraud. So that was unexpected. I thought the files went straight on the market straight away. But if you look now, the LinkedIn hack from 4 years ago, it's only come on the market now. Really, you can go get that information now. So they do sit on those files for a long time. But we're talking about literally hundreds of millions of consumer records from the US alone are online and available. So your information is already out there, and it's kind of a scary thought.
full blocks.
Sorry.
The blocks are full.
Yep.
That you can't get a transaction through Bitcoin. It could take 20 minutes or 30 minutes before your transaction gets posted.
Yeah, this is a very big block size debate and how you deal with it going forward. I don't think that, I think market forces will determine an outcome here. The issue is that there are so many transactions going through Bitcoin right now, and the current settings allows for only a certain number of transactions per block, so every 10 minutes. And when it hits the maximum, it creates a backlog. And so what the miners are doing, effectively, they're prioritizing the transactions that have a higher fee. And because, for example, if you put a free transaction through the blockchain, it's probably not going to get picked up, so you have to put a fee with it. I think market forces will determine the outcome there post-halving day. I think pre-halving day, we're not going to see anything. Post-halving day, there's going to be a lot of activity. The way Bitcoin works is you've got mining pools that all act, in their own, sometimes mostly their own best interests. But at a point where I would say the composition of the Bitcoin hash rate, this is getting very technical. The composition of the Bitcoin hash rate will change dramatically in July, and the power shift may happen from some pools to others. And if it does happen, you may see people switch over to hard fork into a different block size. So it's a wait and see for me. Nothing will happen in the next 6 weeks. Cool. Thanks, everyone.